Welcome to Iraqi Dinar Hub, the premier global resource for IQD, VND, and exotic currency holders focused on preparation, not speculation. Imagine standing in a bank, your pulse quickening, clutching carefully preserved Iraqi dinar notes, only to hear the teller say, "We cannot accept these." For many currency investors in 2025, this moment is all too familiar and emotionally draining. Yet, rejection at the counter isn't the end, it's a potential turning point for those who are ready. Why is this happening? The global financial system is undergoing rapid changes, with currency reforms, stricter regulations, and advanced technologies reshaping how foreign notes are redeemed. This is especially true for exotic currencies like the IQD, VND, and ZWL. Central banks are tightening security, and commercial banks are aligning to mitigate financial crime risks. This guide equips you with actionable strategies and expert insights, not guesses, to navigate rejection, reposition your holdings, and potentially optimize returns in the evolving 2025 currency markets. Preparation, not panic, is your key to success. Rejections of exotic currencies are rising, but they're driven by practical financial controls, not conspiracies. Banks worldwide have adopted advanced note verification systems using scanners, anti-counterfeit tools, and AI to inspect currency details. For instance, pre-2003 Iraqi dinar notes are rejected as they were demonetized by the Central Bank of Iraq (CBI) after Saddam Hussein's regime fell. Similarly, outdated Vietnamese dong notes, replaced by newer polymer designs, are often declined due to obsolescence. Zimbabwean bearer checks tied to the hyperinflation era are now collectibles, not legal tender. Banks also face intense regulatory pressure to comply with anti-money laundering (AML) and know your customer kick rules, accepting only notes that meet strict authenticity and legality standards. If a bank lacks a direct relationship with the CBI, State Bank of Vietnam (SBV), or Reserve Bank of Zimbabwe (RBZ), it's likely to refuse your transaction. Understanding these dynamics turns rejection from a setback into an opportunity for strategic redirection through preparation and policy clarity. Your first step after rejection is to verify your notes thoroughly, as the burden of proof lies with you. Inspect each note for condition, checking watermarks, security threads, microprinting, and serial numbers. Minor damage like worn edges or faded ink can trigger rejection by modern validation systems. Only post-2003 Iraqi dinar notes with updated designs and anti-counterfeit features like color-shifting ink are accepted by the CBI. Vietnamese dong has shifted to polymer notes with transparent windows, phasing out older paper versions. Zimbabwean bearer checks are largely obsolete unless reissued by the RBZ. Technology can assist. Use digital verification apps or professional grading services like PMG Paper Money Guarantee or PCG's Currency, which provide authenticity certificates to boost credibility of banks. These tools minimize friction during exchanges. Verifying your currency isn't optional. It's your strongest defense against preventable rejections in 2025. Stringent financial environment. If your notes are valid, investigate your banks. Specific policies on exotic currency exchanges. Not all banks operate under uniform rules. Each has unique procedures based on risk assessments, compliance standards, and ties with foreign central banks. Your local branch may lack the authority or systems to process IQD, VND, or ZWL, even if the bank's private wealth division can. Ask targeted questions. Does your institution process Iraqi dinar or Vietnamese dong redemptions? Or do you accept professionally graded currency from PMG or PCGs? Inquire about formal ties with the CBI or SBV and request written documentation of the bank's foreign currency policy. This clarity helps you avoid misinformation and provides leverage for escalation or alternative options. Large banks like Chase, Wells Fargo, or TD Bank often have specialized departments for exotic currencies, typically for high net worth clients. Understanding these distinctions saves time and reduces frustration. If your bank can't process your currency, seek specialized institutions equipped for exotic redemptions. In 2025, banks like Chase Private Client Services, Wells Fargo's Foreign Currency Division, or TD Wealth Management, offer dedicated resources but often require significant financial profiles or prior relationships. Alternatively, professional redemption centers in major U.S. cities tied to international financial networks are emerging. These centers demand strict compliance, including verified ID, biometric data, and detailed currency origin documentation. Many maintain real-time links with central banks like the CBI, SBV, or RBZ to validate notes against current records. Search terms like CBI-affiliated banks near me or Dong Redemption Center USA 2025 can help locate these services. Proactive investors are already booking appointments months ahead. A bank's rejection doesn't end your journey, it signals the need to refine your strategy and connect with the right institutions. Meticulous documentation is critical in today's compliance-driven banking landscape. Every redemption requires a clear paper trail. Provide proof of purchase from reputable sources like Travelex, certified brokers, or private dealers, linking the notes to you through legal transactions. Compile government-issued ID, e.g., passport, driver's license, and your social security number or tax identification number for IRS and FIN-CEN compliance. Many banks now require a currency holder declaration, attesting to the legality of your funds and redemption purpose. Transactions over $10,000 may need notarized affidavits confirming no ties to money laundering or terrorism financing. For Zimbabwean bearer checks, you may need disclaimers acknowledging their limited redemption value due to historical hyperinflation. Comprehensive, organized paperwork is your ticket to acceptance. In 2025, compliance isn't just a formality, it's the foundation of a successful exchange. Gut rejections may signal a broader financial shift, not a dead end. Financial analyst Jordan M. Whitaker suggests that rejections reflect a cleansing phase before potential currency revaluations, ensuring only compliant, documented notes circulate. This aligns with global trends. Iraq's adherence to IMF Article 8 signals open convertibility. Vietnam's CBDC pilots show digital innovation, and Zimbabwe's gold-backed instruments aim to restore credibility. These steps integrate exotic currencies into global trade and reserve systems. Financial historian Dr. Amamira Sadat compares this to post-WW2 Bretton Woods, where those who understood monetary shifts gained long-term advantages. Rejections are part of a strategic preparation for asset-backed financial models and currency resets expected in coming years. By focusing on structural changes, not just notes, investors can position themselves for significant opportunities in the evolving global economy. If banks reject your notes, explore legitimate alternative exchange channels in 2025. Licensed currency brokers, overseen by FIN-CEN or holding state money transmitter licenses, offer market-reflective rates, secure documentation, and tax-compliant reporting. They act as intermediaries, bridging individual holders and institutional processors. International currency kiosks at airports or border hubs may accept low-denomination exotic currencies, though rates are less favorable. Private collectors may buy rare notes like pre-2003 IQD or Zimbabwean bearer checks, but exercise caution, using secure payments and legal counsel for high-value trades. Redemption agreements with vetted intermediaries offer preset rates but require transparency and strict KYC/AML compliance. Regardless of the path, choose reputable providers and prioritize diligent preparation to protect your assets in a compliance-heavy environment.